Yeah, I wish there was an economic rationale. Certainly Macau doesn't fit into that. If you were proceeding according to what's important economically in China, Macau wouldn't crack the top 100 issues. So I think John's got it right. There are economic concerns, for example, that retail sales figure you just noted being so weak. But I think this is coming from Xi, and I think he's also right that the party Congress where Xi's trying to extend his rule is fall of next year, which means we have to anticipate another year of this, that it's political, that the only way you link data concerns with tech companies to Macau gaming is that you're attacking other members of the Communist Party. What they do with their wealth, what they do with their consumption, gathering data on them, and so on. Obviously, that's not the way the Chinese are going to present it. But it's certainly not economic in its rationale. It doesn't seem to be prudential financial regulation or anything of the sort. It looks political, and it looks aimed at the rest of the party.
Derek, so...
Hey guys, welcome to the channel Market Uncharted. As you've seen today, we are going to discuss the Chinese economy, the China biggest companies, and something that's happening with the China Evergrande, the real estate mogul in the Asia. This is really important. We go step by step. First of all, just have a small overview about what is China and the impact of China in the world, in the trading cycle. I think everyone knows how big and great they are, the flow of funds, the deployment of investments they do around the world, the power of Yuan, especially now with movements on commodities as well. So it's always China or US, the biggest ones in the world. Also the top 10 companies in 2017, as you can see here in FinTech, China was together with United States. First 3 places were Chinese companies. I think most of us are already used by now, especially in the US, to see Chinese company everywhere we go. Alibaba, Baidu, GD, Tencent, and so many others. And even in the last Olympic Games, you can see that China was against United States for the most gold medals. So we understand the power of China in our day-to-day business. So a quick recap on the Chinese tech stock. What happened was, during this year, the Chinese government had launched a huge attack on these China companies, a crackdown, as we see, by the regulators knowing more information, saying they were too overvalued, saying something needs to be done here, pushing back on the IPOs on the US, opening anti-monopoly investigations. So it was really a mess. Since then, the Chinese companies went really below the all-time highs that they were having. Also, the Chinese housing boom that we have been experiencing from the last few years also slowed down, especially since the COVID-19. The tech stocks, as we were saying, in comparison with the US tech stocks, also completely different scenario. US tech stocks are on all-time highs. Chinese not so much, since the crackdown on the Chinese government. And also understanding that this had an impact. China has a huge impact on the emerging markets economies. So with the fall of these companies and the crackdown overall have been pushing the emerging markets to lows, as you can see, only comparable with the 9/11 or the LTCM event in '97. Also, this was important to understand that the weight of China again on these emerging markets is really high. Investors were starting to understand that although other economies like India, etc., could be or could have been going okay, China had a really huge impact, and the underperforming of these Chinese companies had a huge issue on the index itself as well. So in comparison, China can be here presenting a good opportunity. Let's just look a few companies. Tencent, cheapest valuation in the last 8 years. Again, only comparable since 2013, but best price to earnings ratio. Alibaba, another one since all-time highs around $250. You can see the crackdown was about $90, really huge. Maybe they can push up from here, from supports. But overall, I present here the ETF FXI, the iShare China Large Cap ETF, where the range that they've been trading since 2000s until now, it's like a rectangle consolidation period right now in the middle of nowhere with a clear resistance and support. And also TSMC, the chip company, Taiwan Semiconductor Manufacturing, also here now it's the largest listed company in East Asia if we compare again with Tencent and Alibaba. And this is something important to understand, that tech sector is the one being most heated. So the stress, as you can see, the signs of stress continue to build, not only by the crackdowns, not only by the mining crackdown also of Bitcoin, but overall you can see the government intervening in the economy, intervening in the financial markets, causing stress. Of course, some investors look at this something different, like for example, Ray Dalio thinks and defends that China can be a really good opportunity for the future. But then comes Evergrande, and I think this is important because the bonds of Evergrande completely crash. China Evergrande, this is a real estate mogul, has been hit by huge debt, and we are now starting to understand that this debt cannot be met by China Evergrande. They already said they are not going to pay their bonds in September. In comparison here, I put it Garden Holdings, Guangzhou and other properties companies to show that we may have a risk of contagion. It's not clear yet. But and I don't think this is going to be just as Lehman Brothers on a great financial crisis, but the spillover can have a huge impact. We see here again China junk bonds yields are the highest since March 2020. I think we all remember what happened in March 2020, so a big drop after. The Chinese central bank had to intervene, so they put it more liquidity in the banking system, just trying to avoid, as we said, the contagion. Some of the other bonds are getting slammed, so the spillover is starting. And you can see here just the price of the bond for 2022. And why this is important? Because it completely fell over, and this is the important part. The contagion part is because most of European funds, US funds, European banks, and so on are here investing. You can see the main holder of this bond is BlackRock, then you have HSBC, Ashmore Group, UBS, Royal Bank of Canada. So if you go over all the bond holders, and for the other maturities, I strongly encourage you to do your own research. China Evergrande can have a contagion all around the world if they actually default. And then this is also important graph done by Crescat Capital, Tavi Costa, where you can see here the comparison between the China growth stocks and the CNY, the Yuan. And you can see they are closely together. And the last movement is the crackdown on the stocks in itself. So this can show that the CNY can have really great impacts on the future. And by the way, don't forget that although for now the Chinese economy still seems a little bit unstable, they are still in the lead in most of the patents for the 6G, the new network, a wireless network. And this is really important because although China is struggling, maybe they are going to go through an honest default to come back better. We will see. Please in this case, pay close attention to China Evergrande and the possibilities of contagion for the future. Guys, thank you so much for watching the video. I hope you like this small introduction to what's happening in China. Never forget, knowledge is not power, knowledge is potential power, execution is everything. And just like the markets, we will not rest.
Well, in interest news, again, an incremental development, but how does it add up for Evergrande? Well, I think, as you say, this really is the clearest sign so far of the extent of the debt crisis that we're seeing at Evergrande. This sort of missed payments on loans, which is actually sort of quite a standard deadline that comes around on September 20th. And of course, adding to worries, really, given that Evergrande has just also hired its financial advisors, two firms that are sort of famous for restructurings.
When it comes to their wealth management products, we saw protesters gather outside of their headquarters. What else can investors do?
Well, that's a really sort of challenging thing here. I think from the sort of retail investor and the wealth management product point of view, the kind of risk for Chinese authorities is that the only forum they have is to kind of go and protest either at the headquarters or in its offices. And there is a danger, of course, that spills out more broadly. Evergrande, as we know, has influence across China. I think from an investor point of view, potentially we could see some investors also moving, so bondholders, also moving to organise, potentially we may see ad hoc committees, or we may see them also hiring financial advisors or legal advisors.